UK government borrowing shoots up ahead of Rachel Reeves' spring statement. The gap between the British government's income and its spending was £10.7 billion last month, we found out on Friday morning, piling pressure on Finance Minister Rachel Reeves ahead of her spring statement on Wednesday. Weak growth and higher borrowing costs are expected to have wiped out virtually all the headroom she had left at the budget in October. So what could be ahead for investors? Well, George Godber is a UK fund manager at Polar Capital. George, how worried do you think investors should be broadly about the state of the British economy?
The economy has been in low growth since the budget. There's no doubt that the NI hike affected growth. Actual fundamentals, not too bad. We've got very strong levels of balance sheet strength at both the consumer and the corporate level. We've got an improving consumer sentiment outlook. And so we've got an economy that's sort of resilient, but sort of just not going anywhere. It's waiting for more rate cuts. And I think, therefore, the spring statement is very, very important on the messaging it sends.
What will you be listening out for then?
First thing, most importantly, I think the gilt market would really struggle if this turns into another tax event. I think that would be taken very negatively. So actually, I think what the Chancellor is likely to do is to stand there and say, these are the areas we're cutting spending. It does appear from I think the phrase is rolling the pitch, that we are going to get cuts in benefits. If you look at the UK versus the rest of Europe, the UK has seen an explosion in disability payments compared to pre-COVID. There's something odd going on there. I don't think it's about taking money away from people who need it. I think it's about addressing structural flaw within the system. So I think you'll see that. And then actually after that, I think the statement is likely to be sort of quite quiet. I think they want to try and show this as a non-event. If that is the case, then I think the market will react positively. I think all eyes will be on, will there be more tax hikes?
You mentioned the gilt market. Whatever Reeves says, we are expecting more than £300 billion of new issuance to be announced next week. How much appetite is there in the market to buy it?
We've seen decent appetite for gilts this year. It's been driven by strength in sterling, which obviously has outperformed the dollar, as have many currencies. The UK is the second lowest debt to GDP in the G7 after Germany, so that's a big help. But of course, and the yields are attractive relative to, other currencies and other places. So I think issuance of gilts, the gilt market has been very orderly in terms of, what we've seen in each of the auctions so far this year.
The Bank of England sounded very cautious this week, George, as it kept rates on hold. Should it have cut, do you think? Does Britain need a boost from cheaper borrowing?
There's no doubt that cutting rates would be, would unlock quite a lot of domestic activity. But roughly speaking, if you look at the stock of mortgages in the UK and the rate that people refinance onto, it is a headwind right now, and so that does cause problems within the economy.
Why do you think then that the bank is sounding so cautious?
I think if we look through the commentary and read the transcripts, the things that are jumping out are they are worried about stickiness of inflation still. That's very much linked to wage growth, which again is sort of north of 5%. That should moderate as we go through the year. There were comments around tariffs. I actually think that's a sideshow for the UK. The UK is the least affected economy in Europe by tariffs. So actually, it's just that stickiness of inflation data that they would like to see removed. Once that was out the way, I think you'd see 3 or 4 cuts.
That was George Godber of Polar Capital. Don't forget, you can watch more videos on Reuters.com.